Hey, welcome back to the channel. Today we're diving into OpenDoor once again, and wow, what a week it has been. The stock put up a pretty solid close, ending the session up 11.58%. That's a strong single-day move by itself, but the bigger story is how it performed across the entire week. Over the last 5 trading days, OpenDoor skyrocketed by 50.73%. That's not a small run-up. That's the kind of move that gets everyone on Wall Street paying attention. As it turns out, that's exactly how things played out. The data came in weak enough to support the narrative for rate cuts, and the market latched onto that story with both hands. Going into this upcoming week, here's where we stand. As of now, there's an 11% probability that the Fed makes a 50 basis point cut at the September 17th meeting. That's not the base case, but it's on the table. Much more likely, though, is a 25 basis point cut. That currently sits at an 89% probability. So the takeaway is that the market is almost entirely pricing in a cut. The debate is just over how aggressive it will be. Either way, it's a big win for the broader equity market because lower rates provide a strong tailwind for risk assets across the board. When I look ahead to this next week, I don't anticipate those expectations to shift dramatically. Why? Because the economic calendar is heavy with inflation-related data, not labor data. We've got PPI, CPI, and the University of Michigan Consumer Sentiment Survey all coming out, but no major job reports. So the labor-driven momentum from last week will likely stay intact. Could something still rattle the market? Sure. If anything changes in a big way, it's probably going to come from an external shock, like political headlines, maybe from Trump making some sort of surprising announcement. But barring that, I think we're set up for another positive stretch for OpenDoor, even if the news flow itself isn't particularly exciting. Let's talk shorts, because that's where things get fascinating. Over the past week, we saw shorts start to creep back in. On Friday alone, shorts added 1.1 million shares. As we head into this new week, 23.77% of OpenDoor's free float is currently being shorted. To put that in perspective, that works out to about 156.36 million shares overall. That's an enormous number. I've pointed this out before, and some people like to argue that the data must be a glitch. But I always find it interesting how these supposed glitches tend to appear mostly in highly speculative names. It's too convenient, in my opinion. Here's another detail. The cost to borrow minimum is actually negative. That means there are brokers out there literally paying people to short OpenDoor. Now, it's not a big number. We're talking about negative 0.2% annually. But still, the fact that the cost is negative at all says a lot about how the mechanics of this trade are playing out. In my mind, it shows that certain brokers are incentivized to push short interest higher. And when you combine that with the speculation already swirling around this stock, it makes for a very volatile cocktail. Options are also an area we need to look at closely. The general consensus for this upcoming week is that OpenDoor will trade somewhere around the $10 range. I've said before that I think that's achievable, and I stand by it. If OpenDoor manages to rally into the $7 or $8 range, that could even force market makers to expand the number of available strike prices. That might sound like a small technical detail, but it would actually be a big psychological boost for bullish sentiment. On the other hand, bears are projecting the stock will dip below $5 by the end of the week. So we've got very different camps pulling in opposite directions here, which means we should brace ourselves for a tug-of-war kind of week. Now let's dive into the open interest numbers from last week. At the 4.50 strike, there were about 14,000 contracts. At the $5 strike, we had 45,000. The $5.50 strike carried 46,000 contracts. Then we saw 63,000 at the $6 strike, 26,000 at $6.50, and 26,000 at $7. When the stock closed at $6.65 on Friday, that meant every strike at $6.50 and below finished in the money. That's a huge number of contracts suddenly with intrinsic value. And here's the kicker. There were no signs of market makers covering after hours on Friday, neither in the dark pool nor in secondary market transactions. That tells me we're likely to see more covering pressure next week, which could add even more fuel to the upside. But here's my take. Ignoring technical levels is like trying to drive with your eyes closed. You don't have to live by them, but you need to at least know where they are. So with Friday's close at 6.65 cents, the stock successfully held above the R2 pivot level at 6.58 cents. That's going to be an important support zone moving forward. As long as we stay above that, I think we're headed for $8. I actually said this back when OpenDoor was trading at just $4. I told you that if the stock could break above 560, it would be a quick move to 6, and from there it could push toward 8. That's exactly how it's played out. So looking at the setup now, with positive momentum, a lot of options exposure, and shorts sitting in a dangerous position, I see a very realistic path to $8 this week. Now, I know some of you want me to throw out crazy numbers like $60, $80, or even higher, but I like to stay grounded. I'd rather be realistic and accurate than sensational and wrong. Expect volatility. If the inflation reports come in negative, we could see the stock test back towards $6, maybe even the $6.20 range. Between $6.20 and $6, there isn't a ton of buyer support, so a retest is possible. But overall, the flows still look bullish. Automated programs aggressively pushing OpenDoor higher, with multiple large buy orders hitting the tape. And this was mirrored in the dark pool as well, where we had a massive amount of transactions. In fact, on Friday alone, there were nearly 700 trades over $100,000 each. That's serious institutional-level activity. In the secondary market, we also saw big blocks move, one at 11.8 million shares, another at 1.2 million. That 11.8 million block was clearly an institution building a position. On one hand, the non-farm payroll report and the unemployment data both came in negative. That spooked some investors who decided to reduce risk. But at the same time, other investors saw that same weak data as bullish because it increases the odds of rate cuts. In the end, the optimists clearly outweighed the pessimists, and that's why we closed green. Looking ahead, here's my base case. If the Fed delivers a 25 basis point cut on September 17th, and then follows it up with another 25 basis point cut at the October 29th meeting, that would be massive for growth stocks, and especially for OpenDoor. Cheap capital fuels growth stories, and OpenDoor thrives in that kind of environment. So while next week will likely be volatile, I still think we end the week green. I don't expect another 50% surge like we just had. That was a rare and unique setup. But a run to $8 or slightly higher feels entirely possible. So that's where I stand. Now I want to hear from you. What are your thoughts on OpenDoor going into this week? Drop your price predictions for the end of the week in the comments. Are you still buying? Are you taking profits? Or are you waiting on the sidelines for a big company announcement before making your next move? Don't forget to hit that thumbs up button if you found this breakdown helpful. Your engagement really helps support the channel and lets me keep delivering these deep dives every week.